This morning, we got some new data which suggests Americans are feeling reasonably good about the economy. That's because U.S. consumer confidence grew for the month of August. The Conference Board says both the long-term consumer confidence index and the short-term expectations index are up for this month. CBS News contributor Javier E is in Washington. Javier, help us explain what these numbers mean, what they tell you about the state of the economy, and how this index is different from, say, some of the political polling we've seen, which maybe suggests a different picture.
Right. So hey, Lindsay, this was a good number in a superficial sense in that the headline figure rose, but it stayed within a very narrow range that has kind of persisted for the last couple of years. And it had a couple caveats attached. So broadly speaking, consumers have become like inured to higher prices, even as inflation makes this slow grind lower. At the same time, mortgage rates have come down. So all of these things sort of help brighten the mood. Now, people feel relatively better, but that doesn't necessarily mean they feel good in a literal sense. They're still spending as results that we've gotten from Amazon and Walmart, who are the two biggest juggernauts of retail, have shown us. And that's kind of in keeping in line with the school of thought that says, watch what consumers do, as opposed to what they say in sentiment surveys, which are still, valuable, and we still watch these things in financial markets, but they don't always capture the full picture.
So what can you tell us about the full picture? I mean, we know the Dow closed at a record high yesterday, but we know some big tech companies are reporting losses. There are other areas in the economy of concern, companies cutting jobs, for example, in tech, in the media, prices still high in some sectors. Why are we seeing consumer confidence go up, and how would you describe the overall state of the economy?
Yeah, I mean, it's a tale of two economies almost. The first, certainly the rise in stocks is helpful to the move because people see this and feel like, okay, my 401k is going up, my investment account is going up. But Bloomberg notes that confidence is still very, well below pre-pandemic levels. People are still feeling the pinch of inflation. And more recently, as you mentioned, the jobs market is starting to soften. So people are getting jittery about a weaker jobs market and what that might mean for how much they earn in the future. So, all of these things kind of converge. And it's a lot of push and pull. But I think the big picture here is people are watching what's happening in terms of layoffs, the rising unemployment. We're still not anywhere near that would be considered levels that are considered recessionary. But people are paying attention to the headlines which say layoffs, a rising unemployment rate, Fed being concerned about these things. And that also just makes them a little bit leery about what might happen in the future.
It sounds like it's all but certain the Fed will cut rates next month, but by how much? We will be spending lots of time with you discussing that. Javier David, thank you.
Sure thing.